Hey everybody, Jeff Sutherlin, eXp Realty, been in the business 25 years, and I'm going to give you the October 2025 market update starting right now. Okay, friends, we're going to go rapid fire. We're going to start off, and people are talking about recessions. The whole theme of this presentation today is that in Arizona, we are doing exceptionally well. We're very lucky to live here. And yes, we may have a recession, and it just keeps on drumming a little bit louder. Let me show you some of the data. Okay, first of all, the Fed's primary objective, the Federal Reserve, is to monitor unemployment and monitor the inflation rate. You can see unemployment went up in September. We're giving this update in October, looking at September data. Yes, it did creep up, but this is across the actual country. This was updated in September, on September 5th, about a month ago. So it takes a little bit of time for the data to get out to us. But you can see there was a tick up in August of 2025 for unemployment across the country. That's not just in our state, but here is the good news, my friends. We live in Arizona and we're in expansion mode. We're not the only state that's in expansion mode. We have a lot of growth going on here, a lot of building, a lot of labor coming into the state with favorable taxes. So we keep on growing. So we're not necessarily like some of our neighbors in California. It's a little bit more dicey. They're treading water. In the red, they're at a recession, high risk for a recession. Right now, we're in expansion mode, so we're very lucky to live in Arizona. Now, when you look at the actual unemployment rate for the Phoenix, Mesa, Chandler area and for Tucson, it's actually gone up in a very, very small amount over last year. From July of last year to July of this year, just a small amount as far as the unemployment rate. So we really haven't had much of a change, which is good news, It hasn't really gone up in Arizona. Now, here's the other thing. A lot of people don't understand this. I keep telling folks that typically when you have a recession, house prices don't go down, they actually go up. And there's something that happens when a recession happens. Typically, you have unemployment that spikes in the middle of a recession. So we're going to keep an eye out on that. Okay. And you can see there is a trend there. High unemployment coincides with recessions. That makes sense. People losing their jobs, so they retract their spending. And what happened is when we had our latest press conference, September 17th, unemployment rates remain low. So because of that, they made a decision to lower their rate, the federal funds rate, by 0.25%. Now, that's not the mortgage rate. That's the federal funds rate. That's the rate that banks can charge each other for interest. That's a completely different indicator than the mortgage rates, but they are indirectly affected. So typically when bad things happen in the then interest rates for mortgages go down. That's the typical rule of thumb. Now you can see exactly that. When you look at this chart, you will see that at the beginning of this chart, way back in July of last year, there was jobs that exceeded expectations. Well, so guess what? The rates went up. And since about July of last year, they've slowly gone down. As of this presentation today, they're sitting at about 6.38. So they haven't really changed much from last month, September. So we're about sitting at about 6.38 right now. Okay, again, a September report, and you can see the different percentages for the different loans. Now, mind you, everything is situational. Everything has to do with your individual credit, your down payment, your income. All those things factor in to the interest rate. But you can see the different ones for 30-year fixed, 15-year fixed, 30-year FHA, which is a government-backed mortgage, and the jumbo rates, which are higher loans. Now, check this out. Whenever your rate goes down 1%, you can pretty much take 10% off your principal and interest payments. I'm not talking about taxes and insurance. I'm talking about principal and interest. That will go down about 10% for every 1% that you go down on an interest rate, right? Right now, we're getting people in, especially with new homes, with very, very low introductory rates, as low as 3.75, 3.99 fixed. Come to us. There's always a way to buy homes. And by the way, the market always finds equilibrium, and that's exactly what we're going to talk about here in a minute. The market is softening up in the fourth quarter of 2025. Meanwhile, the stock market is on fire. We've been taking a lot of gains in the stock market, which should help the luxury price point because typically people that buy high-end properties are typically doing pretty well in the stock market. So that's the one area of the economy that's doing extremely well. We are very seasonal in Phoenix. That's Pinal County, Maricopa County. As you can see, typically, once you get to November, okay, November 15th, the market really slows down, really slows down. The amount of contracts that are written goes way down. But here's the good news, the supply for this year is actually going up. What does that mean for a buyer? That means we're in an absolutely awesome buyer's market right now. We've only been in about 4 over the last 20 years. We're in one right now. I expect the market to get softer as we continue on through the end of the year. Big time opportunities for buyers, a lot of concessions will be offered, and a lot of closing cost assistance, price reductions, etc. We operate with a company called the Cromford Report. They're phenomenal. They have what's called a Cromford Market Index. It basically gauges the differences between a buyer's and a seller's market. A good rule of thumb is anywhere between 90 and 110 on this index is a balanced market. Anything less than that, the buyers have an advantage. Anything more than 110, the sellers have an advantage. So let's take a look at what's going on. Again, this is in September. You can see the supply was actually at balance. But since September, the supply has been ticking up. So the next time you see this, you'll see the supply probably ended up more on the green side. So because you're getting more and more supply on this particular measurement. Okay, also, market index is at 81%. So that means overall, we're in a buyer's market across all the different municipalities overall. But that doesn't mean we don't have certain cities that are in a seller's market. Okay. So demand still very low. Okay. So again, we have supply inching up, we have demand that is staying low, which makes it a buyer's market overall. Now, this is a fresh slide. This is October data, and you can see what I'm saying right here when I'm looking at this 22,000 number. These are active listings that are on the rise. This is very current data, which we should be looking at that, and I expect that number to go up through end of Q4. And you keep in mind, look at the difference between 2024 and 2025 in terms of supply, something to take a look at. Now, we're in a buyer's market. You can see anything under the yellow area is a buyer's market. However, over the last few months, we've been coming out of the buyer's market. Well, if you look at this very last area down here towards the right on the buyer's market, you can see it's starting to go down again, which means it's becoming a buyer's market, an even stronger buyer's market. And that could start to go down a little bit more as we continue to inch up with supply and people are buying less homes. Usually September and October, there's a little flurry of activity, more listings hit the market. That's exactly what happened. And then we have a slowdown towards the end of the years. Right now, we're in a buyer's market. Again, you could buy now. If the rates continue to go down, you could refinance later. And let's talk about that in a minute. Look at what's happened since 2014. Here's a good example. Back in 2020, 21, that just wasn't reality, guys. It was COVID. It was COVID pricing. We were having immense amount of money going into our economy, a lot of currency being delivered into our economy, and the market was heating up tremendously. Look at the difference between like September 2020 and now, as far as the amount of sales that are happening across the board, and the Phoenix metro area is significant. But still, we're still transacting, 5,000-6,000 homes every single month. That's nothing to sneeze at. That's still a decent amount of volume. We will see less agents towards this end of the year. A lot of agents are not going to renew. This has been a cleansing of the industry the last 2 years. A lot of agents will not want to continue with this career. I've been in 25 years. I will continue with this career. And we're getting buyers in right now with good rates because we know where to find them and we know the housing developments to go into. And we're asking a lot from sellers right now. And in many cases, they're giving us what we need for our buyers. Okay. You can see we've only had about 4 or 5 buyers markets way back since 2001. Had a severe one in 2006 through 2008, then another one in 2010, another blip in 2022. And now we're sitting here several months into this in 2025. It is definitely a buyer's market. But interestingly, look at these sellers markets that are still hanging tight. Gilbert went up quite a bit last month, from going from a 99.2 index up to 114, 15% change. We've got a lot of changes happening here, but you can see at the top, these are the these are the areas that are still appreciating, still a seller's market, balanced markets in the middle with yellow. Now, what do you notice at the bottom? The buyer's markets. Typically, these buyer's markets are on the periphery, they're on the outside, because if you're living on the periphery of the Mesa, Phoenix area, you're going to go into a buyer's market first and you will be the last to come out. If you're on the interior, one of these interior cities, you're the last to go into a buyer's market and you're the first to come out because buyers go from the outside of the outskirts of town and they buy inside when it comes more affordable. When it becomes more affordable, they start to eat up the supply in the interior cities. And then what happens? They flip back into a seller's market. So this is what's going on right now across the valley. The best deals we're getting right now are in Goodyear, Queen Creek, Buckeye, Maricopa. Great deals we're getting our buyers. And as you can see in their graphic of what's happening between sellers markets and buyers markets and buy and balance markets. It's up to us to figure out what the right area is for you. And you just tell us where you want to move. And we find that area, the best deal for you, whether it's a resale or a new home. Let us go to work for you. You can see the median sales price in August of 2025 was 444,000. Look what happened in September, 460,000. It went up K in a month. And that was just through 14 out of the 21 closing days of September. So that's what happened last month. It started to trickle up because we have usually activity in the fall. People are coming back to school. People are moving into town. They want to get housing before the school year starts. Now, look between last year and this year, the differences. We have the lower prices on the top of this chart, and those are making up less of the sales, going from 60.5% to like 58%. That makes sense, right? Everything's gone up. Everything's gone up. And then the middle band there between 5K and 1.5 million, that's gone from 35.8 to 38.3. So that's gone up. The amount of sales per price range. Now, luxury 1.5 and above has remained static. Makes a lot of sense. But right now we're seeing softness in the market through the end of the year, especially in those outlying areas. So again, it's very situational depending on where you're at in the valley. But here's the thing I want people to watch for the end of the year, this line, okay? We're up 22.5% from last year in supply. If that supply keeps growing and we don't really have any flattening there, then you're going to see a very soft market in Q4. Sellers are going to be panicking because they don't want to keep their listings over Christmas. If you're a buyer and you can get in, now's the time to get in. Now's the time to get in. And by the way, they're asking for a lot. They're asking for a lot when they're coming in. And when we represent buyers, we're asking for a lot. Right now, the days on market are 44 days. Look at that compared to like 10 years ago. 10 years ago, we saw 40 days on market before we had contracts on homes. Now it's 44, biggest in 10 years. Okay. And we also have a median cost from sellers. The median sales concession, we're looking at $10,000. That's 53.9% of the time concessions are being given to buyers at a median concession of $10,000. As you can see, another buyer's friendly metric. Historical concessions all the way back to May of 2008. When we track this data, you can see they've gone up significantly. It makes sense because the prices have gone up for homes. Okay, concessions happen the most in this yellow band from 225,000 all the way up to 600 grand. That's where you're going to see the most concessions in housing. We're seeing our sales listing price to our actual sales price go down a little bit, the ratio. So this is just the listing price versus the actual sales price. 98% in September of 2024 between the listing price and the sales price. Now in September 25th, 97%. So there you have, my friends. I hope you thoroughly enjoyed this quick market update for October 2025. Let us help you. Let us give you a non-obligation consultation, whether you're a buyer or a seller. We have tremendous experience. I've seen all the markets and I know how to protect my clients and get them the best possible value that we can. I really appreciate you. If you could hit the subscribe button, I would give you many, many thanks. So thank you so much as we head near 1,000 subscribers. Take care. Jeff Sutherlin, eXp Realty. Thanks a lot.